Hey, what's up you guys? This is Junior Trader and in this video we are taking a look at two earnings potential breakout this coming week. Well, we also have a very important one on AMD, but that will be a separate video. It may not be a breakout earning, but we do have these two stocks looking really good and they have their earnings. Google already broken out, but this has a room of just continuing. And we'll talk about that price action in just a second with the options data. And I just want to really quickly show you Palantir. Not quite has broken to the all-time highs, but is ready to rock and roll. But we'll talk about that as well after we talk first about Google. Well, so Google price action has remained bullish through, well, it has done its thing. It has been roller coaster for sure. And this is where this has maintained its bull flag. And lately it has broken out of that all-time highs. All right. So price action is bullish. It's a clean breakout. We do have a good support through the pullbacks. Well, first of all, at this level of 201 and 48 cents and also 196 and 48 cents. Now, the thing is that no one knows what's going to happen through the earnings. So we have to take the scenarios of potential gap ups and gap downs. So what I want to first take you over is a previous data to see if and how much Google has gapped up or gapped down in the earnings, because that will put us in very close likelihood of potential scenarios. So in the previous earnings, Google had a gap up of 6%, almost 6.5%, all right? Earnings prior to that, did we have something there? Yes, we did have a gap down. So we had a gap down of almost 4.5%. So definitely it's a gapper, right? And the earning prior to that, it was a good gap actually there. And this gap was 11. So it's a little bit all over the place. It's 4 point, minimum case is like 4.5 and so forth, right? So, and max has been around, what was it, 11, 12%, I guess? Sorry guys, let me just really quickly take a look at it again. And yeah, almost shy of 12%. So let's take bottom and the top case here. So again, look, we are technically bullish, so any gap up that happens, that's great. Google has a room to just continue higher. But what I want to focus on, what if it gaps down and will it still keep it bullish or will it break its leg? So let's take an example of the nearby case. Let's say Google stays here for the next couple of days, which it can very well do. The earnings week, usually stocks go sideways until earnings happen. So let's say Google stays right around here and base case that is 4%, will 4.5 almost, will bring it down to 194, which will be right around over here. This necessarily doesn't make Google bearish, all right? Google problem in the structure will only be there if we lose and break down below, actually it's just not 190, but I would give it 187. If Google gaps down below 187, then I would say there's a huge problem on Google for the gap down, right? Then it's a broken structure. If Google gaps below 191 but stays above 187 in the price action, it's still weak, but this may linger around here and then either break or tries to recover. So it's not an immediate break, but there's weakness below $190. But if Google gaps down and stays between 191 and 196, that still has a room to remain fine eventually and tries to find its way back up. All right, we'll have to see. But those are the cases, and based off of that, the price action would accordingly, as I just said, either will be really broken chart or not. I want to take an example of that 11.5%. Let's say if Google really gaps, well, it's done then. If Google goes 11.5% gap down, it's broken. Yeah. Even rebounds, then it will be just eventually be sold off and it will be bearish. It's just done. So anyways, so far price action is really looking nice for the breakout, and I want to show you the options on Google. So these are the options interest for this coming week. Definitely there is more interest on the calls side. That's where the whole density is and the volume is, and 215 is definitely standing strong, which Google can easily do. It's at 204, 215 is not far away. So that's definitely possible through the gap as well. Now, other thing I want to point out is 170 is where the put spike is, but that I don't foresee that happening. That's just even if we go 11%, even if we go 11% down, it's still not going to happen. 100, and so yeah, it's impossible in my opinion. Anything is possible, but in my opinion, that's just way too far away. So definitely calls where also the options traders have more interest this going week, and also Google price action is supporting that. And as long as, even if gap down happens, but as long as we can still hold above 191 area, this zone, we will still just be fine on Google. All right, but more likely the price action and everything is looking for an uptrend on Google. All right, the next one is Palantir, guys. Palantir almost breaking out all-time highs. Well, structure is bullish, and this blue box down here is very important that we'll be talking about. So I'm just going to actually move it a little bit here, up here. Yeah. So look, Palantir, full on bullish. I want to show you first the options right away. $80 is where a huge spike is on the call side. And however, it's already at $82.49. So it's, again, it's cumulative as well, but definitely there is already a lot piled up for it ahead of the earnings. And definitely, even if price will keep going up, $82, sorry, $80, those calls will still keep making money. And let's go to the earnings. It's in the morning or evening. It's after market close on Monday. So, well, they're setting up for a really good breakout. And not just the $80 calls, but also at the higher levels like 86 and 90, we have good amount of interest. Relatively, we have higher calls interest than the puts. And now I want to talk about the scenarios. How much can Palantir gap up or gap down, and what will remain fine even if it gaps down? So the first thing I want to talk about is how much does it gaps up or gaps down. So Palantir previous earnings, it gapped up of almost 15%. That's quite a lot for a stock like Palantir, but that's good stuff. Earnings prior to that, we gapped up quite decently, actually, 11.7%. Again, this is in relative to the scale of the price as well, all right? So it will seem higher percent, right, as well. But anyways, then before that, it's gapped down to 13%. So it's between 11 to 15%, right? So let's take an average of 13% overall, all right? So definitely Palantir, if it continues to gap up, or even like anything until 13%, which right now may sound quite high, but you know, $93 is the zone that it can do technically in the gap up. What would be the gap down? Let's say if it stays, well, it will be here actually. 13% will only bring it down to this blue box here. And this is what brings me now to this importance of the blue box. Why this box is important? Because it's a structural, either a support, or if we lose it, a structural breakage and the resistance. Even if Palantir gaps down but can stay above the $72 area, this zone, it's actually a zone, guys. This particular $69 to $72, I actually can show you this better on the hourly interval, or maybe 4 hours interval actually. Let's go over there. So it's a zone, and yeah, it's a zone, all right? So just because definitely this is a top end of the zone, that is 72 and 37 cents, but there is a I like to call them tornadoes touchdowns, but this is yeah, this is a good demand zone from the past as well, and here it found it. That's why it's an important blue box, because it held the structural support, and yeah, and then we are rocketing up from there, right? So yeah, anything until that area, even if it gaps down but stays above 72, structure on the overall chart on Palantir would not be broken, and it will have a room still to get bought back up. Definitely if we lose the bottom end, that is $70 area, that's where I would say it's broken. All right, then it's kaboom, right? But anyways, so far so good. Two stocks, Google, Palantir, both looking like a really good breakout earnings. Anyways, nothing is guaranteed. You have to have a stop loss, only trade what you can through the earnings, especially. You have to, again, do whatever you want. You can do a straddle, right? You can trade both calls and the puts based off of the volatility that you expect. For example, with Palantir, we have around 11% volatility. Again, you don't have to go 11%. You can go 6 or 5% based off of that criteria. You can make your decision. And your calls should be able to, or puts, in other words, vice versa, should be able to outdo the losing position. Now remember, it doesn't happen always. Tesla this time, unfortunately, Tesla in the past has always done it, but this time it just went sideways, right? But it's most likely what has happened in the past has the likelihood of in the stock market to give you in that same way. It's not a guarantee, but it's better than just trading with no idea, right? Especially during the earnings, you just never know what's going to happen. So your best bet is during the earnings to trade in the scenarios where you at least have some better guarantee than just gambling the money away in the earnings, right? So you can't just go like, oh, I think this would happen, let me gamble it. No, you, especially in the earnings. And beyond earnings, before and after, it's all about price action. That's where we have more hold on the positions, on what are the 80% likelihood scenarios happening, and based off of that, we do the technical trading, right? So, okay, that's what we have on the Google options and Palantir options, and also the price action is what I want to talk about in this video. If you found it helpful, valuable, please hit the like, subscribe. I'll see you in my next videos. Bonus stocks coverage for the members. 30 plus stocks coverage comes out for them. If you are interested in any of that and my tools, links are in the description of this video. All right, take care guys, bye.